All right, good morning, everyone. Let's get going here. Okay, we saw U.S. markets finally have a correction where we actually saw it close on the lows. I mean, we've seen the market drifting down for several days in a row now, but we just haven't been able to see it continue that momentum to the end of the session. You can see there we actually closed on the lows of the day, more or less, and I think that's really significant. What really took the biggest beating was the technology sector, which we saw the Nasdaq do about 2% to the downside. We did have the utilities that were up, and obviously the guys are going for defensives, kind of shifting out of some risk. And you've really had a swath of the biggest players in the game that have kind of come out over the past week and a half and said that they think the market's fully valued here. Some of them said that it's bullish. Some of them said that they're expecting a good 15% correction. We're talking about the likes of Stanley Druckenmiller, Julian Robertson, those kind of guys, George Soros. I think even Warren Buffett made some comments saying that he thinks the market's fully priced. So, I think that's definitely also weighed on the market a bit when you start to have the real big boys come out and say that markets are struggling or markets are fully valued, then they're going to struggle anyway. We also had the start of earnings season, which kicked off yesterday after the U.S. bill. We had Yum Brands and Alcoa on the day, so we'll show you those in a second. But you can see there in Asia, we really had a kind of a odd day, I guess. Following on a day like this, we had the Nikkei, which traded higher. I think more on their some of the new jobs legislation that they have out. We also had the Australian market that was up a bit, but a bit mixed as well, having the Hang Seng down on the day. We had the White House yesterday that officially appointed Janet Yellen as the next Fed chairman, which I think the market obviously fully expected, so not really a big surprise there. But I mean, just confirmation that a more dovish central banker, one of the more dovish ones that would have replaced Bernanke, is going to be the next chair likely. All right, we had, like I said, Alcoa and Yum Brands yesterday. You can see Alcoa beat on the EPS and the revenue numbers, but the guidance was a bit soft, so that was actually a bit mixed. You can see Yum Brands actually missed on both the EPS and revenue numbers, and I think they're really struggling to continue with their expansion into China. The Chinese numbers are bad after some bird flu incidences. Obviously a bit disappointing there. And then we've got Costco today before the U.S. bell. I think what's really important, I actually think that this earnings season is going to be really, really important, considering we've seen this is the sixth quarter in a row where we've seen earnings guidance revised down by the majority of companies. And we're obviously we've traded up, I think, 6 consecutive quarters in a row, so there's only so long that can last. And I think that this is going to be a very important earnings season for us. Just on another note, we had an analyst from UBS, Tom Price, that spoke in Australia this morning. He made some comments saying that iron ore may fall in the short term to as low as $70 a ton on seasonal steel output, and he expects to see average prices this year around 120 and next year around 110. So I think that kind of goes in line with mostly what we've heard out of a lot of the other analysts. They really expect iron ore prices to come down in the short term. And you can see that in some of our our stocks like the Kumba iron ore, which has really been struggling. It's kind of missed the whole rally from the commodity sector of recently, and we've seen some reasonable pullbacks of some of the other diversified miners. Right. Market data out today. We had Japanese machine tool orders out a little bit earlier. We've got industrial production and manufacturing production out of the UK. We've got industrial production out of Germany at 12, and then in the States later we've got mortgage apps, and the Fed's going to release their minutes from the September FOMC meeting, so that's going to be something that we're going to want to watch out for, obviously only after our hours are over. Okay, let's jump into the maps. All right, the kind of focus that of what I wanted, what I wanted to look at today is on the index side. There's some really important things that are happening here. If you look on S&Ps, you can see here that we dropped support yesterday. That just doesn't look very good. There we go. There you can see a little bit better that now. You can see that we dropped support on the S&Ps yesterday. It doesn't matter if you draw it from from the wicks or from the the candles. Either way, we dropped support on the trend line. I actually saw a lot on the kind of Twitter sphere or a lot of the blogs and things like that yesterday about this. So I think the market is definitely paying a hell of a lot of attention to this. We haven't dropped out of this trend line support in quite some time. I remember when we were testing here, everyone was watching it real closely, and we just really consolidated. You can see we made this nice punch through to the downside here, and I think that obviously it's been driven a little bit by the issues that we have in the States at the moment. If you look at we can look at Germany. I'll actually shorten it up a little bit here. You can see that we've right at we're coming down right here to test support. Let me just fix this. Coming down right here to test support in Germany, which is, let's see here. We're looking at, call it, I would actually take it down here about 85.30, where we wicked up on that day. There we go. Right around 85.30, I think, would be a break of some sort of support on the DAX. I think we can actually take it a little bit lower and line it up with where we gapped up from right there. I would feel comfortable saying that that's kind of our level. Call it 85.25 on the DAX, and that's a spot price on the DAX, not the future. So I think if we drop 85.25, you can see how well this thing's held up. I mean, it's been rock solid. The U.S. market's been correcting, FTSE's been correcting, and this one has really been the outperformer. So I think if this thing drops to 85.25, which you can see it survived once 2 sessions ago, I really think that we'll see some downside here, at least maybe coming in to test trendline support down here somewhere, and possibly the 200-day moving average. All right, let's look at the FTSE. The FTSE as well. I'll actually back it out a little bit so you can see it a little bit better. But we've really dropped support, which is pretty clearly defined right here around, call it just a touch south of 6,400 on the FTSE. And we also dropped the 200-day, which you can see there. And if you look, we kind of, if you have a look at trend support, we've still got a ways to go to kind of get down and test trendline support in the FTSE. So I think we can potentially come down and maybe test that. If we're taking that from kind of dropping out of this pattern, we definitely target-wise should trade down there closer to 6,200. So I definitely think that there's probably more downside on the FTSE. Watch it around this level. If it comes back up to test 64, it's definitely going to be a level we're going to need to watch. We'll look at the Aussie now, some local futures here, and we'll shorten this up a bit. You can see, we talked about this level the other day, which is really where we kind of are this morning. Call it 38,850, which you can see there. Let me tighten this up a little bit more so we can see better. Call it 30. Yeah, like I said, 38,850. We've just dropped below that this morning. I think if we can hold below that level this morning, I think we've got more downside to come. I think we can trade down here to where we broke out from back in the early part of August, and that's definitely a significant level for us. We made a nice breakout here early in August. We came down and retested it toward the end of August, and we really made a huge push higher. So that level's all the way down here at 37,630. You can maybe call it 37,650, but somewhere in that range is definitely where I would place the potential retracement to. Like I said, if we hold below our level this morning at 38,850. So don't be surprised to see a second day play on the offer in the local market this morning. Okay, well, let's look at Exaro. Back out here a little bit. We talked about this maybe a week ago when we came down and we sort of tested this level at about 159. We actually really only came down to 160. It's right at the 200-day as well, so it makes it even more significant. If we drop this level, I think we can continue to go lower and significantly lower. You can see here really on a trend line we're kind of at some sort of support as well. So this level is significant. I think that I mean it's not the greatest trend line to have a look at. So let's just scratch that out. But the bottom line, this is definitely support. We're definitely also going to test the 200-day. Watch it today. If we drop this level, I mean we saw the negative comments on iron ore and things like that could impact our mining sector a little bit this morning. So let's watch this closely, see if this holds. This could be a big indicator for us. Pick and pay, not one that we show very often, but the reason why I wanted to show this thing, it was definitely in a downtrend, and we've quite clearly broken out of the downtrend here. And we've made just a huge pullback, but the pullback is actually, to me, looks like a beautiful flag pattern setup. We kind of dropped a little bit below the 200-day now after breaking nicely above it. And I would, I think this is maybe not a bad idea to keep an eye on this one. Look for, an area for this thing to break through this little flag to the upside, and it might be worth a little bit of risk. I know it's been the laggard, but to me it's kind of turned the corner and trading and changed the pattern. And as a trading statement, from what I understand, coming out next week. All right, so the last one I'll show you is the Discovery, which you can see obviously dropped the bottom end of, I wouldn't even draw it down there at the wick, but bottom line, obviously it's definitely broken down. What I think is important is just kind of looking for the next level of support. Remember, this has been one of the strongest stocks on our board. This sector has been just an unbelievable sector to be playing on the long side. We're finally getting a correction. We've already had a 20% correction off the top, which is quite significant. We just crossed below the 200-day moving average as of yesterday's close. I would expect this thing to come down and maybe test around 75. There's definitely some significant support here at 75. If it drops 75, then we're going to have to go back and try to dig up support elsewhere. Maybe look to where we broke out down here around 68, but 75 to me definitely looks significant, and I would look to maybe have a nibble there if you like these kind of plays, and if you'd like to buy on support. And that's it for today, guys. Thanks a lot. Be careful out there. We could, like I said, we could definitely see a second day play.